There's something about a halo in mind, and it's working so fine that I just gotta say, hey, I really got a magical spell. Save highlight, share, mute microphone. That ain't it. Huh. No, that ain't it. Phil, how's it going there, Mr. Phil? Brandon, what's happening? Blah, 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 blah. How are you, dude? All right, let's go over here and let's take a look at what we're doing today. Alrighty, good evening, everyone. Let me just get started here. Where were we? Yep, everything's good. If someone check, hola, Alexander, how are you doing today? TikTok, hello, sir, how are you? Well, I'm above ground and everything's working. Had a great day today. Went and played some soccer this morning, went to church, kicked around, relaxed, cooked, cleaned, that kind of fun stuff. Hey man, what's your thoughts on Mason Graphite? Actually need to have the ticker symbol on that one. Joe, Phil, how are you? Okay, so lovely. Tomorrow. All right, let's get started. Tomorrow starts week number 12, LLG. LLG. Mason Graphite. Can't find that symbol. Sorry. It's time to sell ExxonMobil. XOM. Yeah, I'd say so. Keep it up. Woo-hoo. All right, so let's get started. First of all, I'm getting educated from watching you. I appreciate it. Robert Simino. Simino? Is that right? All right. Anyway. I like Riot. ARKK. Jacob, I'm 100% sure about that. Simone, how are you doing today? We're just getting ready to get started. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Hollywood, what's happening? Brought to you by the 10-Minute Trader, where I invest in dividend stocks for a weekly cash flow. I am specifically looking for a safe, predictable, consistent 1% per week. Hey, let's get that 1%. Way to go, Hollywood. All right. That being said, it is the 22nd of September. What does that mean? Well, it's the first day of autumn. Well, second day of autumn. Okay, so fall is here. Fall has fallen into our lap. Is what it is. Anyway, rude dude, what's happening? Tomorrow, Monday, is the last trading day of the, wait a minute, sorry. It's Monday. It begins the last trading day of the quarter. Okay, so tomorrow, first day of the week, is the last trading week of the third quarter. So next week, not tomorrow and the next day, but the next week following that, we're going into the fourth quarter. Hope you guys are doing well. I'm doing just fine. I'm getting my safe, secure, predictable 1% per week. Sometimes I make more, sometimes I make less. But on average, it is over 1% a week. Still nursing on that throat there. How's the grandson? I haven't seen him all week. I'm going down there tomorrow. Hopefully I'll see him tomorrow. Dawn, how are you today, Dawn? All right, that being said, let's get through the disclaimers, if we will. It's Sunday night. Okay, tomorrow's Monday morning. Market opens up bright and early. We're going to take a look at some stocks tonight that might be on the list for next week. Simano. E-A-U-X, the end of the Cajun or French name. Name is pronounced. Oh. Robert Simino. Okay. Cool. Robert Simino, you want to take a look at oh man, I was getting ready to respect you there for a second until you want to take a look at Realty. Hell no. All right, hold on a second. We got a couple that already were before you were. Are they right there, Zach? Keep it up, bro. Way to go. Okay, so let's go through the disclaimers. Number one, never blind listen to somebody on YouTube. What the hell do we know? Do your own due diligence. I'm just some random guy here online. You guys don't know me from anything. Some of you may have dropped me a phone number. I may have called you. You may sign in here every night and watch what I hear and hear what I have to say. But still, main reason we are here, well, the main reason I'm here is I want to share the information that I have up here. Okay, you're probably here to gain the information. Well, this guy's making 50% a year. How can I do it? Well, the trading strategy I'm about to teach was created for my 9-year-old daughter back in 2008. Now, in 2008, well, things were kind of a little wacky, but, it is what it is. She was 9 years old then, cute, cuddly, all the kind of neat things. But she jumps up on my lap and says, Daddy, can you teach me how to trade just like you? I said, sure, why not? So I had challenge. I had 5 things to overcome. It had to be simple. It had to be safe. Had to be predictable, consistent, and no way for her to lose. That's the challenge. I had to come up with a trading strategy that met all of those requirements. All right, so I came up with a few rules. You ready for them? Rule number 1. Never buy something you don't understand. Always go into it as if you're going to buy it and hold on to it for the rest of your life. Never buy something you don't understand. Now, every once in a while, you guys will throw stuff at me like here, ARKK. Never heard of it. Never. So why would I invest in something I've never heard of? Well, I'll take a look at it for you, give you my opinion. Rule number 2. Never sell at a loss. It kind of defeats the whole purpose. Rule number 3. Make sure the company is consistently profitable. Okay? I like to cheat. I grew up in the 70s and 80s when they came up with Cliff Notes. That's where somebody would read a book and make notes on it, and instead of reading 500-600 pages, well, we only read like 20. Cliff Notes, kind of cheating. Me, I go directly to the dividends, because the dividend is a portion of the profits paid directly to the investors, and that's who we are. We are the investors. We buy, we sell. Well, we are the investors. That being said, if the profits going to the investors increases every single year, well, logic, reason, and common sense tells me that they must be consistently profitable. Now, I could go in and read all the quarterly reports, all the annual reports, profit and loss statements. I could do all that. But think about it. If a portion of the profits goes to the investors, okay, they don't change that portion. It's the same year after year after year. Let's say it's 1% or 2% of the profits, whatever it is. It's consistently increasing every single year. So, hypothetically speaking, they're profitable every year. Now, I personally like 20 years of increased dividends or 20 years of profits, however you want to look at it. Rule number 4, make sure the company has weekly options. Okay, there's stocks and there's options. An option gives somebody the right to buy it at a certain price by a certain date. I like weekly options. That allows me to get weekly cash flow, and that's where you get the title from. Dividend investing for weekly cash flow. Without the options, you're not going to get weekly cash flow. It's that simple. Okay, rule number 5. Make sure all the numbers work. And what do I mean about the numbers? Well, we all know what the numbers are. Some of you do, some of you don't. Let me explain, and it's going to say, yeah, of course. All right, first number I want to look at. What am I buying it for? All right. Second number, what can I sell the covered call that is closest to the purchase price? The purchase price, $115.27. Well, the closest strike price over here is going to be the $115. All right. Now the $115, how much am I making? $136. Well, that's over 1%. That's what I'm looking for. I'm not looking for this. I'm not looking for that. I'm looking for this right here. Okay. If that is over 1%, and it's really easy to see, okay, here's the last price. The last price is here, $115.27. The bid, the ask, this is what I'd be paying for it tomorrow morning, $115.27. Well, if I move that decimal point over 2 places to the left, well, $1.15 is 1%. Well, the 115 is going for 136. That's well over 1%. All right, that works for me. Now that's half the equation. The numbers work. Great. But is it the right time to buy? For that, we need the chart. More specifically, very first thing I want to see is the 1-year chart. Now my account here, this is my trading platform with Thinkorswim. Now you can go to thinkorswim.com, download this onto your computer for free. It doesn't cost you anything. But to get permission to use it, you got to go to Charles Schwab, and they'll let you use it for a little while, but they would like you to open up an account there. I don't get anything from that. Perfectly fine. But I like the trading platform. Everything I want is right here. Now, I've looked at many, many, many trading platforms over the years. I've been trading for over 20 years. I looked at a lot. I even wrote a book 12 years ago about finding the right trading platform. This is the one I like best because it has everything I'm looking for. First thing I always want to see: the high, the low, where was it, where is it, and what direction is it currently going? This one's going sideways. 5 things: high, low, was, is, and direction. All right, so like all that, now let's jump in and take a little closer look. A year ago, we're at 115.57. Isn't that weird? A year ago, we're at 115.57, and right now we're currently at, that is weird. Look at that, 115.27 a year ago, and we're both basically at the exact same price now. Well, close to it. All right, so 115 a year ago, we bottomed out the end of January. It looks like 95.83, okay? The top, 123.93, was in the middle of April. Okay, so from there, she drops down to here, shoots up, pulls back, now she's up. Look what happened on Friday. Friday's a little bit of pullback. I want to get a closer look at that. But this is like a 90-day chart. It goes all the way back to April. So as you can see, look at the movement. It's like an awesome, a beautiful movement. Look at this. Up, down, up, down, up, down, up, down, up, down, up, down. Nice movement. I like stocks that move like that because I jump in, get my 1%. Thank you very much. See you again next week or whatever. Right, that being said, let's take a look at the last 30 days. We want to go to 823. There it is right there, 823. Okay. A month ago, up, down, up, down, up. Should be coming back down now. So yeah, somebody in the chat said time to get rid of ExxonMobil. I think so. Not time to buy. Okay, definitely time to get rid of it. Now, if you're doing interputs, great. If you're doing short selling, great. That's not what I do. It's not what I teach here. What I teach here is one strategy only. That's dividend calls just before the EX dividend date. I like to call it dividend capturing 2.0. All right, so Zach, now that I explained all that, wait a minute, I got one more thing to explain. Okay, now, some of you may or may not have gotten an email, a text, a DM, or a notification from someone saying that they're me. There are currently, at this moment in time, 27 imposters pretending to be me. They use my pictures, my videos. They even have someone that went and opened up a Gmail account, dividendstockdoc@gmail.com. That ain't me. Hey, sorry. You can hear me here. You can see me here. My information is right up here in my bio. And if you really want to talk to me, drop me your DM with your phone number and I will call you. If you're in the United States, of course. If you're not in the United States, you're going to have to leave me an email so that I can send you a Zoom link and we can chat that way. But that's what I'm here for. I'm here to help you guys out. I already know how to do this. I'm just, here teaching you guys. Ooh. I don't know who it was, but somebody's suggestion, ginger, honey, and some kind of a tea. Ooh, check that out. Tristan, thank you. All right, so let's move on. Zach wants to look at ARKK. I have no idea what that is. ARKK. ARK Innovations ETF. Yeah. Here's the thing. Let's take a look at Yahoo Finance. Now, in Yahoo Finance, we're going to take a look at ARKK and find out exactly what the numbers look like. Okay, so people want to invest their money into something. You've got to be shitting me. Dude, what the hell are you thinking? Do you see these numbers? The yield, 0%. Year-to-date profit and loss, -10%. Hell no. I ain't even bother looking any further. Okay, and Riot. Let's take a quick look at Riot. RIOT. Now, I can't complain too much about Riot because I actually own some of it. Not that I bought it on my own accord. I bought it only because someone else. Can't see your screen. Oh, the screen is on YouTube Live. Okay? Okay, this screen here is live on YouTube. Okay, so whether you're on, because there's two YouTube channels. There's one me standing in front of the screen. Tra-la. And there's one of them, just the screen on YouTube. So if you want to look at those numbers, simple, easy. Okay, so Riot was referred to me, and this is what it looks like. Last 30 days. Where are we? Right there. Okay. Last 30 days. Check it out. High 30 days ago. Here's our bottom 2 weeks ago. Okay, she went up, a little pullback, now she's up here, now she's starting to pull back again. So, I won't be buying any Riot this week, but look at the numbers for Riot. 7.20 is the stock price. The $7 is going for 38, which means if you take off that 20 cents, because if I'm buying it at 7.20 and I'm selling it at 7, well, I'm losing 20 cents right off the top. Well, if I'm losing 20 cents off the top, I got to take it off this profit, which is 38 cents. You take 20 cents off that, so I'm walking away with 18. May not sound like a lot of money if you think about it. 18 cents on a $7 stock is over 2%. And I'm perfectly happy grabbing 2% every week, because 2% every week is over 100% per year. And if you're getting over 100% per year, well, don't you think you can kick in 15 minutes a day, 10 minutes a day? Albert, I have been doing calls on Alibaba for the last 2 months at over 1%, but the stock price increased quite a bit last week. Do you think it's too high now for covered calls this week? Oh, well, let's take a look at Alibaba. Okay, now I have bought an Alibaba in the past. It doesn't fit this trading strategy, but I'll take a look at it and tell you what I think. Oh, yeah. With Alibaba, seriously, dude, I'd wait for it to pull back. Okay, so here's your bottom here back in July. Look at up, down, 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 up. Where do you think it's going next? Just wait for it to pull down. Once it pulls down, find a price that you're happy with. At this moment in time, that's a little bit too high for me. 88.24, the 88s are going for 139, the 89s are going for 93. Both of those are going to give you well over 1%. But here's the thing. Friday was a down day. Okay, she gapped up on Friday. Let's zoom in a lot closer. Okay, Friday she opened up at 89.22. Okay, way up here, and she ended up closing. That don't look right. If she opened up at 89.22, oh yeah, that's right. She closed at 88.29. So she gapped up on Friday, and she pulled back. So you have a gap here, which hasn't been filled yet. You got a gap here that hasn't been filled yet. Now gaps have a tendency to fill. So if you really like Alibaba, okay, I honestly can't tell you what to do, but I personally would wait for it to pull back a little bit, what, a week or two maybe, before she comes back down to this area down here, unless it's going to continue that upward trend, which is possible. But you're going to have a little bit of a pullback here to take care of this. So just keep an eye on it. All right, so let's keep on going with all our other questions. Uh-oh. I missed all these questions. All right. All right, Hollywood. Taking a look at CC. What the heck is CC? Chemers. Yeah. All right, so Hollywood, you're in Chemers, huh? First off, high, low. Wait, here's a low over here. What the heck is that? Okay, high, low, is the direction. It's currently in an upward direction right here, the very last 3 days. Well, let's zoom in, take a quick look. But before we do, it's currently at 1870, 1993, so the 20 is going to be the closest. Oh, hell no. It should be 19. But that's a big spread. I wouldn't do anything with this until tomorrow morning, because tomorrow morning when the market opens, these numbers are going to be a little bit closer together and a little more realistic. But the math doesn't change. Okay? The purchase price, the closest strike price, and then what is the premium on the closest strike price? And is that going to give you 1% or more? After you figure that out, well, then take a look at the chart. Well, look at the last 30 days. Up, down, up, down, up. Well, she's coming down now. Sorry, Hollywood. That baby's coming down. Rick, do you have a maximum number of positions you like to hold? If I have money, I'm buying something. Now, once in a while, in an ideal, perfect world, I'll have positions per account. 20%, 20%, 20%, 20%, 20%. Well, it's kind of like 18.5%, 18. But 98% of all my money is invested at all times. I have no desire whatsoever to leave money alone against inflation. Hell no. I would rather take my chances at 1% a week, which is over 50% a year, to get a consistent increase on my money. I don't want to leave any money sitting around, but that's me. Okay? I don't have very many bills. I don't have very much overhead. The amount of money I have coming in at 1% takes care of all my bills. I can even take care of all my bills if I scrimp a little bit at 0.5% per week. Well, 0.5% per week, that's easy. I can do that blindfolded. But 1 to 2% a week, yeah, that takes a little bit more energy. But, you know, it is what it is. Figure out how much you need on a monthly basis. Then work the equation backwards. If you need $10,000 a month to live comfortably, well, you're going to need at least $250,000 invested at 1% per week. Because $250,000 invested at 1% per week, that's $2,500 a week. That's $10,000 a month. Okay, it's a hell of a lot easier getting $250,000 than it is getting a couple of million, especially when you have those powers that be saying, yeah, give us all your money, we'll give you a 4% draw. A 4% draw on $1 million is only $40,000 a year. How the hell can you live on $40,000? You need $1 million. Okay, I can live on, what is it, $250,000, that's $125,000 a year, which is 50%. Sounds better to me. But they don't teach this kind of stuff. Because all right, so I'm going to pick on what's his name, Robert, because he wants, So 20% max in one stock in each account. That's me. Okay, if in a perfect world it's 20%, 5 positions, 20%, because 5 positions is really not that difficult to keep an eye on. You know, I mean, I have 300 stocks that I look at. Okay, here we go. Let's get out of here for a second. Okay, here's October 24. This is my old list. Okay, look at all the companies I have here. Comcast, Cisco, Delta Airlines, Oracle, Visa, Verizon, Marvel, Gap, MasterCard, Abbott Labs, Apache, Lowe's, Clorox, Texas Instruments, Cisco, Bristol Myers Squibb, JP Morgan, so on and so forth. Now, Robert wants to take a look at O. Well, righty then. Thanks for your thoughts. You're welcome there, Rob. Robert Simoneau wants to take a look at O. So let's take a gander at O, and I'll explain to you why I do not like O. Number one, here we go. Number one reason I don't like O. It's a monthly optional stock. Now, we all know from elementary school that there's only 12 months in a year. Now, here's an interesting question. 12 months in a year, I can only do a covered call once a month. That's only 12 times. Now, if it was a weekly optionable stock, I could do it 52 times a year. Okay? LJ, PLTR has no dividends at all. They're great for the wheel strategy, but it's not a stock that I like because there's no dividends. So when the stock goes down, what are you collecting? You're not collecting dividends. It's not consistently increasing. And how do you know if Plantair is actually profitable or not? Well, now you have to go and read all the annual charts and the, what do you call them? Annual reports. Take a look at the, what do you call that? The quarterly reports, earnings reports, all that kind of nicely fun stuff. Yeah, no thank you. All right, so we're still at O. Hold that thought on O. You ready? Let's go on O. let's go over to Yahoo Finance, put O, and let's take a look at some of the fundamentals for O Realty. Reason number one, reason number two, I don't like O Realty, 5% rate of return, okay? Forward dividend plus yield. The dividend is $3.16. The yield is 5.13%. Now, if I'm showing you how to make 1% per week, now I know I would like to think that you know and you agree that 50% is a lot better than 5.13. But hold on, still not done. Another reason, if I needed another reason, but here we go, another reason why I don't like O Realty. We're now going into the data stream. For those of you who don't know what the data stream is, that is where all the information is being stored. The opening of the day, the high of the day, the low of the day, the close, the volume, the date. See? Now I just want to look at the dividends only, because I want to see how consistent this company is with increasing their dividends. Because if I'm investing in a company, well, I want to get paid, and I want to make sure they're consistently profitable. Okay. Wow. All right, so they're going all the way back into the 2000s. All right, so it's over 20 years. But let's look at the numbers. You ready, Robert? Ready for this? 9 cents. 8 cents. Okay, let's go all the way back right here. 1997, they're paying 8 cents. 1998, paying 8 cents. 1999, paying 8 cents. See that? They haven't increased at all in 3 years. That's just the first 3 years. Okay, so 1999, the end of 1999, 9 cents. 2000, 9 cents. 2001, 9 cents. 2002, 9 cents. 2003, 9 cents. Okay, they finally go up to 10 cents in the mid-2003. That's 4 years of no increasing. Okay, so now we're at 10 cents for 03, 04, then it goes to 11, then it goes to 12, it's at 12, 13, then 14. Look how long she's at 14. August 2008, 2009, 2010, 2011, 2012. Then finally, almost through with 2012, they changed it again. So they increase their dividends every 3 to 4 years. Yeah, no thank you. There's no consistency there whatsoever. So why the hell would you put your money into something that's not consistently profitable? You know, that's a question you got to ask yourself. I sure wouldn't do it. I like companies that are consistently profitable. That's where I put my money. You can put your money anywhere you want. You want to put it into O Realty and get 5% a year? Hey, more power to you. Okay, let's keep on going up. Yep. Don't listen to him. Stay. What do you think of MPW for Monday? Simone, let's take a look at MPW. Okay, MPW. MPW. Just to let you know, to be totally transparent, I do own some MPW. I believe I have it in 3 different accounts. No, wait a minute, 4 different accounts. MPW. If the numbers work, I come from an age where if it ain't broke, don't fix it. Darby Lee, how you doing? If it ain't broke, don't fix it. If I'm consistently getting 1 or 2% every single week from a stock, why would I get rid of it? Ask me. Answer me that question. Why would you get rid of something that gives you 1 or 2% every single week? That's over 50% per year. Hell yeah. All right, anyway. Here we go. MPW. High, low, where was it? Where is it? What direction is it going? See, she went all the way up here to 6.5. Now she's pulling back. All right, so let's take a close look at that. Lucky Larry, how are you? Back again. All right, nothing good on TV, Larry? You want to sit here and listen to me? All right, we should have your mental stability questioned. I can't be that compelling. Anyway, a year ago, whoa, before we go any further, 576, 579, the 550s are going for 31. The 6s are going for 8. Both of those are over 1%. Let's get rid of this one here. I don't need this one. Okay, I actually have, see down here, this is my position. I actually have MPW at 471. All right, let's continue. A year ago, we're at 532. Your content is better than TV. Well, you know, just got 200 ticks on NQ. Cool beans. Now I'm assuming NQ is, you're talking ticks, not pips. I'm a little confused. Now, pips are Forex. Ticks. Futures, there you go. Cool beans, I like futures. You ever read the Commitment of Traders report in the futures? I talked to a futures trader and they never heard of it. And I said, what do you mean you've never heard of the futures Commitment of Traders report? That's like the Bible for futures traders. All right, anyway. MPW. Let's look at the numbers. A year ago, 534. We bottomed out in January at 294. We got a double high at 655. Okay. Once in June and once a week ago. So let's take a look. All right. 30 days. And you tell me where you think it's going. 30 days ago, we dropped here, went up, pulled, shot through the roof. Now she's coming down. Now, I like MPW. I actually own some. But for buying more MPW, I'm thinking 2 weeks out. MPW. Now, for those of you guys just signing in, I do take a book and I do write down stuff. So when I say I'm writing it down for 2 weeks, well, 2 weeks from today, it's going to look similar to this right here because I wrote this stuff down 2 weeks ago. So this is what's on the list for this week to take a look at because they did the exact same thing 2 weeks ago. 30-day bottom, 30-day top, coming to the downside 2 weeks ago. So now it should be down here, which is a perfect opportunity to buy, hypothetically speaking, because we haven't looked at them yet. Okay, so Moan, I personally am not getting any new positions. I'm coughing, sneezing, and I'm in pain. I went and played soccer this morning. Had a blast. I got a Charlie horse. I'm going to feel this for the next 3 days. Anyway, that being said. So Simone, I do like MPW. It is in my roster. I do trade it every single week. I have no intention of getting rid of it because this week, as you can see, I got $1.52 on my 471s. Okay, I bought it at $471 and I sold it at $1.52. That's a fat premium. So I'm going to keep this one. I'm going to keep rolling it because if it continues to give me more than 2% every week, why the hell wouldn't I? Think about it. Okay. That being said, I'm not picking up any new positions in MPW this week because I'm waiting for it to pull back. All right. That being said, let's move on to the next one. Darbilly, good evening. I already said that. Micron. I love Nepal. Okay. What was that again? Micron. MU. Okay. So here we are with Micron. High, low. Where was it? Where is it? What direction is it going? It's currently at 91.15. The 91s are going for 440. What are you kidding me? That's huge. That's like a 4% return. Well, let's take a look at Micron Technologies. MU. Well, you got to really like MU, right? The reason why I say that, look at the dividends. 94, 1 penny. 95, 3 cents. 96, then nothing from 97 to 2021. So, in essence, they only have like 3-4 years of dividends. Don't sell at a loss. It's so true. If the company's consistently profitable, you just hold. All right, Tristan, I don't just hold anything. I buy, sell, buy, sell, buy, sell. I'm looking for cash flow. I'm not looking for capital appreciation. Okay? So, I like Micron technology for the numbers. I mean, the charts, you see it? That looks great. A year ago, at 69.35, we bottomed out at 63.41. Well, here's our top right here. She went from 61 a year ago to 157 in June. That's a nice profit. That's over 100%. Wait a minute. 60, that's over 200% profit. Okay, because 60 and 60 is 120, another 60 is 180. No, all right, so it's like 170, 180% increase for less than a year. Now, from June 20th, she drops here, pulls back, drops again. Now she's bouncing to the upside. I like where it is at the moment. Here's the last 30 days. Okay, check it out. Last 30 days. High 112, drops down here at 84. Well, now she's going back up again. She's sitting at 90. I like Micron Technologies. I'm going to write that down for tomorrow. All right. MU for tomorrow. Woohoo! I think that's an idea. Let's do that. All right. So, that being said, who came up with Micron Technology? Love Nepal. Nice idea there, kiddo. Sales, I'm making more than 1% per week. Simone, awesome. Tristan, don't sell. Yep, just hold. Simone, thank you for your time, James. All righty, Simone. Simone, I'm waiting for you to jump on that morning trading call there, kiddo. All right, lot of Tesla gets $3,000 a share. I'll be in on dividends. Alrighty. Good for you, the mysterious Avenger. I don't like Tesla. They don't have dividends. What should we invest this week? All right, Shaka, 615. I have no idea who you are. I can't give you any advice whatsoever. I know nothing about you. You really want to talk to me? You really got my opinion? DM me your phone number. I'll give you a buzz and we'll chat. Ernie J, nice to see you too. Colin, can you do Target? TGT. Now, for those you don't know, Target has been around for over 100 years. They have increased their dividends every single year for more than 5 decades. All right, so here's our high, here's our low, here's where we were, here's where we are, and here's the direction it's going. See, she dropped down, now she's turning around going to the upside. Okay, fine. Let's take a look at the numbers. Currently, we're at 154.92, so the closest strike price is going to be the 155s. Well, they're going for 172, which is over 1%. I might even take a look at the 152.50s. If that gives me 1%, well, that's already in the money, which means I'm less risk. Hey, it's Doc. How's it going there, Doc? Nice to see you, Ernie. You explained it very well. Thank you there, Mr. Tristan. Michael, what is the best dividend stocks to buy and make over 100,000 a year if you start with $1 million? Well, all right. Michael, with $1 million, okay, with $1 million, 50% return on $1 million is 500,000. If you're just looking to make 100,000, well, you could do that. I could do that almost blindfolded, personally. Okay. But Michael, if you really want some help, DM me your number. I'll give you a buzz. Chat with Doc. He's in the same position. He's got more money than he knows what to do with, and I talk to him on a weekly basis. Mahesh, he's new here too. All right, so let's get going. So Target A year ago, we're at 113. We bought them 102. I didn't need to look. I actually owned it when it hit that bottom last year. Now we have our double top at 181, and that was the beginning of April. From there, look at this drop from the beginning of April to the beginning of August. Now we're down to 132. Sideways for a bit, 2 gap ups. This gap filled, but this one hasn't. So we're currently at 154. She shoots up, pulls back on the upside. Now she might be pulling back. I would wait for Monday or Tuesday to see what happens next. Because as you can see, let's zoom in a little closer. Okay, the high of the day on Thursday was 157.39. Friday, 157.39. So it didn't really drop from the high, but it made a lower low on Friday. So I'm a little iffy which direction is going. See, from the bottom here, 145 to 157, that's 12 bucks. Okay, 12 bucks on a 140 stock is about what, 8-9% increase? And that's what, 2 weeks? So you make 9% in 2 weeks. Some people might bail. I would. I'd bail after 2 or 3% to the upside. I'm only looking for 1% a week. I'm not greedy because I know 1% is easy. 1% is simple. Okay, if I'm getting a safe, simple, consistent 1% per week, hell yeah, that's 50% per year. It takes me 15 and 20 minutes a day. 15, 20 for the week, it's about a little over. Now, in one of my accounts, I have 100,000. Okay, well, actually, it's 100. What is it again? Hold on a second. For those you didn't know, all my trades are posted right here. Just click on one. My trades for the week of the last week of July. Here you go, right here. MPW, Siri, General Electric, Nucor, Walgreens, CVS, MPW. Okay, for this week here. They're all listed week by week. And this week I happen to make, what is that? 3.36%, but they're all there. All right, so what I'm saying is, if you take however much money you have in your account, now I do understand this is just stock investing. You may have real estate, you may have gold, you may have silver, you may have your money in any numerous places. But here, in this little world here, this little tiny little bubble of Mr. James, that's me, here, 1% per week. Now, if I have $142,000 in this account right here, 1% a week is $1,400 a week. At 1%, that's $1,400 a week. And if I'm putting 1 hour in making $1,400, thank you very much, I'm good. Okay? But that's just this one account. That's not this one, or 3 or 4 of the other ones that I have. So think about it. If you have X amount in your account, if you have 10,000 in your account, 50% is 5,000. If you have 100,000 in your account, 50% is 50,000. Okay? If you have $1 million in your account, 50% is a $500,000. Okay? But this is just one small little itty bitty tiny sliver of what's possible. Okay, this is predictable, consistent, and no way to lose if you do it right. All right, let's continue. Mahesh, how are you doing today? Tristan. Thank you for that, Tristan. It was very nice of you. Shinaba. Shinaba, did I say that right? Shinaba wants to look at Caterpillar. I like Caterpillar. As a matter of fact, I'm trying to figure out how to get my Caterpillar running. It's a 31, I think it's a 3125 or 3128. It just won't stay running. All right, so Caterpillar, here we go. High, low, where was it? Where is it? What direction is it going? I'm going to tell you no right here. I'm not going to go any further with Caterpillar. Not that I don't like Caterpillar. I do like Caterpillar. Let me tell you the reason why I'm saying no to Caterpillar for this week. I'm actually writing it down for 2 weeks from today. But the reason why I'm saying no to Caterpillar for this week, look what happened here. Okay, the beginning of the month, we're here at 354. We drop down to 325, and we shoot up to here. That's the high of the year. Yeah, no thanks. I don't buy that close to the high. I will wait for the profit taking to take place. If you bought up here at 325 and it's up here at 375. That's a $50 profit. Okay, people playing this game for $50 for a week. Yep, thank you very much. I'll see you next time you go back up again. Any opinion on the gap? Hal, we're going to take a look at that in a second. Hold tight. Palouche, I've been so busy. Can you drop me your email and show you what I have on Weibo? Palouche, you actually have to give me your information for me to contact you. Okay, I have like 8 or 9 different email addresses. Okay, and I look for people here in TikTok. So send me a message here in TikTok because I review those every night and then again first thing in the morning. The Jones brother, how are you today? Okay, so let's keep on going. Hal wants to take a look at the gap. So let's take a look at the gap. Oh, why isn't that going up? Uh-oh. All right, so Hal wants to take a look at the gap, so let's take a look at the gap. GAP, I think the gap is on the list for this week, isn't it? First thing, high, low, where was it, where is it, what direction is it going? Look at it, heading to the downside at the moment. Okay, it's at 2032, 2056, the 2050s are going for 38, well over 1%, so that works. Let's take a look at the chart. A year ago is the bottom, and that was 985. It took quite a while to get to the high of the year of 30. So it goes from 9 to 30. So 9 to 18 is 100. And then 18 to 27 is 200. So that's a little over 200% increase from a year ago until June, the beginning of June. That's nice. All right, so from there she drops and drops. Okay, here's a bottom here. Shoots up, pulls back, shoots up, pulls back. Looks like she's pulling back at the moment. I'd wait a little bit longer. Maybe next week, if we zoom real close into that one. Okay, here's the last 30 days. Okay, here's the last 30 days. See where we are? 2550. We drop down here to 1950. Pulls up, down, up, down. Now she's coming down, but kind of going sideways. Look at the channel she's in. If she comes down a little bit further, I like to buy down here and then wait for her to go back up. This is just one of those companies. Now, when I say I got 300 companies in my roster or on my list or in my calendar, however you want to take a look at it, okay, I have the gap. It's on there. So when the gap has its dividend, I want to see whereabouts is it in the charts. And if it's the right place, well, hell yeah, I want to buy some. It's the gap. All right, I grew up with the gap. Okay, anyway. Sexy Hockey Dad, how are you today? I'm a little sore today. I went and played soccer, so got a Charlie horse, got a bruise on my arm. I had fun. I think I was the second oldest one there. Most of the kids are in their 20s, 30s, and some of them were in their 40s. Only a couple of us are over our 60s, but I was still out there. You're stuck at 28. Hey, Hollywood, anytime you want to trade, I'll gladly be 28 again, and you can be 60. Matter of fact, you can take everything I have. I'll be 28, and you can be 60. All right. Kerry, how are you, Kerry? If it gapped up on volume like that, that's good. Might make a cap pattern. Now, Kerry, what I'm going to say about volume nowadays is I don't pay much attention to it anymore. It used to be that the market makers were honest and sincere people, but nowadays they take advantage of the system because if they get a bad report or a good report, it's really irrelevant. They can do whatever they want. If they want to gap down or gap up, that's 100% up to the market maker. Okay? And he doesn't have to have a reason to do it. He just does it. So yeah, I don't pay much attention to the volume because of that. Well, I pay attention in a manner in which it is an average volume. Okay, but when it has a volume gap like that, I like to know why. And usually it has something to do with an earnings report or some kind of report. But then I take a deep look at it and I figure out why the market maker did it. And you might be sad to find out why the market maker did that. All right, Shinaba. Halliburton is at support. What do you think? I like Halliburton. I actually have some Halliburton. I wouldn't call that support yet, you know, because it only hit it twice. Okay, and it's usually one day after another. So that's, support is when you have more than one. See if I can find one. Yeah, this would be more like support here. Okay, that's more like support right here. You see it? Where it hits a certain price right there. This is what I would call support right here. Same area, 34.60, 34.80. See how many times hit? 1, 2, 3, 4, 5, 6, 7. 7 times. That's your support. When you go all the way over here, hold on a second. Currently to where we are right now, 2 days. 2 days doesn't really, I don't consider 2 days as support. Now you might be looking at the 15-minute chart. You might be looking at the 1-minute chart. You might be looking at the intraday chart. Yeah, I don't look at those. I only look at after end of day data, because I don't want to sit in front of the computer all day. I want to jump in, make my positions, jump out, take my 1%. Thank you very much, and then, you know, do it again next week. Okay, I'm not looking at some point. Okay, you may not be there now, but at some point in your life, you will no longer be chasing money. You will want more predictability, stability, and safety. Well, that's where I'm at now. So if you're here looking for capital appreciation or ways to make a bunch of money really quick, this ain't it. Okay, this here is a deep dive into cash flow with safety, predictability, and consistency. Safety being the top of the list. Okay, I've been working since 1973. Okay, working since 1973. I'm entitled to retire now. I have put plenty of years into the system. Okay, I have enough money to keep me satisfied, but I don't want to have to go back to work if I wanted to. But I've only been retired since November, so I haven't even had a year off yet, and I don't even have a year off yet because I'm still working on my mom's house. I'm working on my son's houses, and don't get me wrong, it's nice that I have the ability to do that. That's great, but like once or twice a week, sometimes 3 times a week, I just sit around and do absolutely nothing. You know, get a nice cocktail, have a little bit of smoke, and just sit and chill and do nothing and just relax. It's great. But here we are. Let's keep moving. Halliburton. So, Halliburton, like I said, I do own some of it. Okay, here's your 30-day high. She drops down here, pulls back up, and it looks like she's starting to come back to the downside. So, if you're thinking of jumping into Halliburton, I would sit and wait and see what happens Monday and Tuesday. Is that really going down, or just a glitch and she's still going to the upside? Because look where the high is. Hypothetically speaking, she should go up, not turn here. It shouldn't turn here. Shouldn't. But it did. All right, so that's Halliburton. Let's keep on keeping on. All right. Big Buck Wall Street 805 wants to take a look at Intel. Brandon, why the hell would I know where P. Diddy is? I have no desire to hear him. I don't even like his music, so don't really care where he is. All right, so Big Buck Wall Street wants to take a look at Intel, INTC. Whoops, let's try it one more time. Now, I love Intel. I especially love it when they had that big drop. See this big drop right here? This thing dropped here. Of course I jumped in and bought some. Why? Because you're going to make most of your money in the stock market buying low and selling high. So, if you have this big drop down here out of nowhere, well, there's got to be a reason for it. And when you find that reason, great. Now, by looking at it, it's one thing. But look behind the chart. Look at the volume. Okay, to see the volume, let's jump in and take a look at a different chart that has a better idea of what the volume looks like. Okay, same thing. Okay, here's our high, here's our low. Down here is the volume. See that blue line down there? Get a better view of it. What I want to show you is take a look at the average volume. See right here? So if we put this line down here, our average volume is somewhere around 50 million shares a day. That's a lot of money. But take a look at what's happening lately. Do you see that big drop right here? This big drop? Well, how many shares do you think traded that day? So if the average is around 50 million, on this day here, Okay, where this big drop is, 298 million. Now that may not mean anything to you, but let's whip out the calculator and I'll show you exactly what it is. And then you'll have a different way of looking at gap ups and gap downs. So if the average spread for the market maker is 2 cents, okay, so the market maker makes 2 cents for every share that is traded. So if you remember the movie Trading Places with Eddie Murphy and Dan Aykroyd, when they were talking about commodities and commodity brokerage, okay, remember how the Duke brothers, they said, well, when people buy, we get a commission, we get paid. When people sell, we get a commission, we get paid. It doesn't really matter which way the stock goes, up, down, or sideways, we get paid for every time somebody makes a trade. Well, great. So does the market maker. The market makes 2 cents for every share that trades. Okay, so at 50 million shares a day, this is a day to be a market maker. We're going to multiply that by 0.02. So every day, the market maker for Intel makes $1 million a day. That's a lot. So what happened when that big gap down was? Where is that big gap? Hold on. See the big gap right here? Okay, 300 million shares traded on this gap down. Now, you may say, what, big deal? Well, if the market maker makes an average of $1 million a day when it trades at 50 million, well, how much did he make on that particular day? Oops. 0.02, 2 cents. Multiply that by 300 million shares that traded that day. Okay, so now the market maker made 6 million on this day. So he makes 1 million, 1 million, 1 million, 1 million, but on this day right here, he makes 6 million. So whether or not the news is justifiable, the market maker has the power to change the direction of where the stock is going. It is the only number that is controlled by one person, and that is the market maker. And that is the opening price of the day. That is controlled by the market maker. He can do whatever he wants, and most of the time he does. And he gets paid very handsomely to do so. So we're taking a look at Intel. Got to verify that I'm human. There we go. Right, there we go. Verify to continue. Yay, you're human. All right, so anyway, as I was saying, I don't trust the market makers. I look at the numbers and see what's happening. All right, so that being said, take a look at where we are. Okay, here's the last 30 days for Intel. 30 days ago, we're at 2050. We dropped, pulled back, see the gap up? Yep, it filled. Came down to the bottom at 1850, shoots up, pulls back. Now here we are at the high of the 30-day period. That was on Friday. Look at the volume spikes. Huge amounts of volume. What does that mean? It means the market maker is making more money than we are. That's what that means. But anyway, it would appear that it will be pulling back. Because as you can see this high here, it's slowly going this way. But then again, this is slowly going that way. So we really don't know. Monday will give us a better idea which way she's going. When you get a chance, what do you think about J.P. Morgan? Tristan, let's take a look at J.P. Morgan. J.P. Morgan. Interesting. Here's our high. Here's our low. Here's where we were. Here's where we are. And here's the direction we're going. Okay, it's going to the upside. Great. Dina, how are you today? The brightness on the screen? Yeah, that's on the white screen. One of these days, someone will shoot. Until then, it is what it is. All right, that being said, all right, we're still looking at J.P. Morgan. Okay, so J.P. Morgan, 211. The 210s are going for 289. Yeah, sorry, dude, but it's the last trade was 211.09. The current price is 211.09. The 210s are going for 289. Now, if I bought it at 211 and sold the 210s, I'll be losing $1 right off the top. So I'm only walking away with 189. That's not 1%. Sorry. So JPM is going to be a no for tomorrow. Okay, we already looked at Micron. I looked at Intel. Dina, his YouTube is a separate screen. Thank you for that, Tristan. Intel, we looked at Iron Mountain. What is that? I know it's a coffee, but what is the ticker symbol? Okay, Intel, we looked at that one. Mike, do you ever collect the dividend? What's your strategy if stock moves against you? Ooh, Mike, thank you for that. Do I collect the dividend? Well, let me give you a quick little rundown. Okay, you see the dates here? IRM. All right, press. We'll take a look at IRM. IRM. All right. You see the dividend calendar here? All the stocks that I like, I put them into the calendar and I trade them when they are getting ready to have their dividend. So let's say hypothetically Lowe's. Okay, let's take a look at Lowe's. Okay, let's get rid of this. LOW. Okay, here's Lowe's right here. Okay, month of October 2024. Lowe's dividend is right there. That's when they're paying their dividend. That's the EX date. Okay, the dividend's at $1.15. So if I want to buy Lowe's, now understand this. The reason why I'm using the calendar and the reason why I use dividend stocks. Number one, a dividend is a portion of the profits. That's already built into the structure of the corporation. So X amount goes towards the investors. If that number increases every single year, well, logic, reason, and common sense tells me the company's consistently profitable. There's no way you can continuously give your investors more money every single year if you're not consistently profitable every single year. Okay, so that being said, the companies that I like have a tendency to increase in value. That means the stock price moves up just before the dividend date. Here's the dividend date right there, the 23rd. So if the stock is going to go up in value before this, well, I want to buy it 2 weeks before that. I could buy it 3 weeks before that if I wanted to, but no, I like 2 weeks right here. And then I buy it on a Monday because this is 2 weeks before on a Monday. What I'm going to do is I'm going to buy it at the opening of the day. I'm going to sell the closest strike price, get my 1%. Now, if I'm out on the first week, great, I made my 1%. Now, this week here, I'm all back into cash and I get to do something else. But if it doesn't get assigned, well, I've already collected the 1% for that week. Now I will take it into this week, which is 1 week before the dividend. I will write another covered call, collect another 1%. If I'm out, great. If I'm not, I will do a third time, collect another 1% or whatever the percentage is going to be. Okay, and I will collect the dividend. So I'll get a premium, 1%, premium, 1%, premium, 1% plus a dividend. And I will keep doing it until it hits my target price. Now my target price, let's take a look at Lowe's for a second. LOW. All right. Okay, so Lowe's at the moment is 260. I wouldn't buy it because it's at the high of the year. But that's just being said. But if I did buy it at 260 and I sold the 260s for someone to buy it from me for the weird thing is I'm buying it for 260 and then I'm selling it for 260. Well, I'm selling it for the same price I bought it for. So what am I collecting? I'm collecting the premium. That's it. The premium is 276. Now, 276 is more than 1% of the 260 that I'm buying it for. So if I'm buying it for 260, I'm selling it for 260, and I'm collecting that premium, which is over 1%, and I do it every single week. Well, there's my 1% every week. Now, if I hit it, great. If I don't hit it, I'll do it again. And I'll do it again, and I'll do it again until it goes over 160 again, or 260. Yeah, until it goes over 260. And then I hit my target. But until then, I get no problem whatsoever holding on to Lowe's. It's on my list. It is a dividend king. It has been in business for over 100 years. I don't think it's going anywhere, but that's me. You have to figure out what companies are best for you. For me, I like the dividend kings. Okay, 54 companies that have consistently increased their dividends for more than 5 decades. Not 5 years, 5 decades. That's 50 years. Lowe's is a company that's been in business for over 100 years, has consistently increased their dividends to their shareholders for more than 5 decades. Well, hell yeah, it's on my list. At this moment in time, it's just not the but you see where it's at the high now? I'll put it on the list to take a look at it in 2 weeks because hypothetically speaking, okay, a month and a half ago it was at 227. Well, now it's at 262. Well, people are going to start taking profits. Okay, because it's not a profit until you take it. That's number one. Number two, nobody ever went broke taking profits. So why the hell not take the profits? All right, that being said, let's progress forward. I do like Lowe's. And hopefully that answers your question. Tron. Clarence wants to look at Tron. What the hell is Tron? Now, if you hear me say, what the hell is that? More than likely, it's going to be a no. Lo and behold, it is a no. Imagine that. All right. Cosiata. Oh, interesting name. Intel. I already looked at Intel. What is SPY going to do on money? Don't know, don't care. It's not one of those things I actually follow because I don't like the numbers from SPY. Number one, it's too expensive. Number two, what you're getting in return is absolutely crappy. Now, Ozdial. Press, Coca-Cola, yeah, those premiums always bite. Okay, take a look. Coca-Cola's at 71. Right now, the 71 is, or the 72 is going for 35 cents. That's a 0.5%. See that? The closest strike price is going to be the 72. That's a 0.5%. No, Coca-Cola. And then Spiders, SPY. Okay, you can't really tell on here, but at $5.69 per share, let me show you some of the fundamental numbers on the Spiders. SPY. Now, this is where I get to say all kinds of bad things to you. I'm not going to go back as far as it goes because the Spiders has dividends way, way, way back. But let's go down to 2000. Okay, so 2000, we're at 37 cents. Then the dividend drops to 35. It goes to 38, 41. From 41 to 32, it drops again. It goes to 35, 37, 39. Then from 39, it goes to 33, drops again. 35 to 38 to 44. 35, it drops again. 36, 40, 52. Then from 52, it drops to 40. 41, 47, 35, drops again. 57, drops again. 49, 52, 57, 52 drops. It goes up, it goes down. It keeps dropping. There's no consistency in it whatsoever. Spiders are no. But wait, it gets worse. I love that part. But wait, if you order now, you can get screwed twice. Okay, here's why. Okay, the Spiders, the rate of return for the Spiders, 1.21%. 1.21%. That's horrible. So no, I don't like the Spiders because if you actually investing in the Spiders, then you didn't actually look at the numbers. Numbers don't lie. 1 plus 1 is going to equal 2, no matter where in the world, no matter where in the galaxy you come from. 1 and 1 is 2. Okay? If you're investing your money at $569 a share and you're getting 1% return, then you're doing something wrong. Why the hell would you do that? Rich Bruner, how are you today? All right, let's keep on moving. Bama Redneck, thank you for that. That was cool. I'm from Brazil. Que pasa, amigo? Como... Oh, wait a minute. Wait, you guys speak Portuguese in Brazil. Damn it, I don't know any Portuguese. I like the 3-year chart for MPW. Dina, cool beans. Which stocks have you seen most successful? Oh, Macy's, Nordstrom's, and Kohl's so far this year. Death Cross. I have no idea what that means. All right, Dina, I don't look at the 3-year because 3 years ago doesn't really mean anything to me. What means most to me is this week, last week, and the week before. because as investors, well, tomorrow is going to look a lot like yesterday, which is going to look a lot like the next day, which will look a lot like the next day. Okay, so what's it going to look like in 10 or 15 years? I don't know, because there's a very small difference between one day and the next. So from the last 3 weeks is one thing, but 3 years ago, it was a different world 3 years ago. Okay, not hugely, but it was. Fela MU Carnell. I have no idea what that means. All right, I'm assuming that's what he's doing, talking to him in Spanish, in Portuguese. Cool. Tristan commented that one a little early, though this was long-term investment stream at first. Yeah, my longest I've ever held anything is 9 months. Okay, this year so far it would be AEO I had for 4 months, and currently I have Win, and then we're into 4 months on Win also. Death Cross, no idea what that means. MU has 3 years dividend history. Yep, Redneck, I know that. It was edging at its finest. Oh, I'm glad you like it. Yeah, MU, wait a second. What about PLTR has no dividends at all? Dividend stock MU also has a 10-year history of performing better right after a cut. Okay, that's cool. Thanks for that. PLTR has no dividend. There, no. Oh, eggs, redneck. Spider jumping tomorrow? No idea. I don't pay attention to the spiders. Okay, where are we? Wow, I'm missing all these questions. Oh, wow, I missed all these questions. Sorry, guys, I have to go back and forth with all these questions. There's so many of them. MU, dividend, blah, 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 to the moon, blah, 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 SPY jumping tomorrow. I don't follow the SPY. Siri, Florida, Georgia, county, cross county, okay. Siri. Actually, Siri's on the list for tomorrow. ARKtrader or not? I have no idea, ARKtrader or not. You have to be more specific with the questions. Let me see what that was. Top chat, edging is finest, which stock, blah, 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 call it IRM. All right, somebody want to take a look at IRM. We'll take a look at IRM right after we look at Siri. Hold on a second. Let's look at IRM right now. IRM. This way I can say no to Iron Martin real quick. Okay, so I don't want you to think that I was ignoring what you asked. You want to take a look at Iron Mountain? Iron Mountain's a no. Monthly optional stocks just don't work for me. The numbers never work out. I'm looking for a safe, predictable, consistent 1% per week. I cannot get a 1% per week on a monthly option. I need a weekly option to get a 1% per week or get any type of cash flow on a weekly basis. You need something that trades weekly. They're called monthlies for a reason. So Iron Mountain is a no. So now let's take a look at Siri, because Siri is on the list for me to buy tomorrow. EA, what the heck is EA? EA, Electronic Arts Incorporated. I never. And you know what happens when I say I've never heard of something? It's usually a no. Electronic Arts. Okay, let's take a look at how many dividends they pay. EA Sports, it's in the game. I have no idea what that means. Okay, dividends only. 19 cents for the past 2 years. Yeah, hell no. It only has 4 years of dividends. No, that's probably why I've never heard of it. What books do you recommend for beginners? Ooh, what book I really liked was Wade Cook's Wall Street Money Machine. I like that one. All right, so let's go back to Siri. Okay, Siri, S-I-R-I. I like Siri. Siri is on my list for tomorrow. The reason why it's on my list for tomorrow, you're going to find out in 2 or 3 seconds as soon as I show you what the numbers look like. All right, so high, low, where was it? Where is it? What direction is it currently going? Okay, here's my bottom here. Currently, we're at 25.17. The closest strike price is going to be the 25. Well, that's going for 62. Well, that's close to 2%. Okay, because we're losing 17 cents right off the top. Okay, so you cut the 17 cents off the profit. All right, so now you're walking away with, what is that, 45, 47, something like that. That's still over 1%. Great. Let's take a close look at the numbers. A year ago at 40.91, we ended up at the high of the year at 58.04, and that was the middle of December. Okay? Here we are in June at 24, shoots up to 42, drops all the way down to 23. Well, let's take a look at the last 30 days. Stocks for long-term trade or what? No, I trade. I don't buy anything long-term. Okay, I got married once, got screwed on that deal. I'm not going to marry a stock because that's all stocks do. Look, they go up, they go down. They go up, they go down. That's all they do. Okay? So, if it goes down, I want to buy it. When it goes up, I want to sell it. When it goes down, I want to buy it. When it goes up, I want to sell it. Down, buy. Up, sell. Because I don't want to hold on to anything. I don't have the luxury like some of you people do to buy something and hold on to it for years waiting for it to go up. Okay? That being said, let's finish up with Siri. So the last 30 days for Siri, okay, take a look. Here we are 30 days ago at 33. She went sideways for a week. She drops, retraces, drops. Here's our bottom right here, Monday and Tuesday. Wednesday was an update. Thursday was an update. Friday was an update. Perfect opportunity to jump in on Monday. As a matter of fact, I am jumping in on Monday. That is not a recommendation. That's just me telling you what I'm doing. Okay? Do not listen to a damn word I say. Do your own research. If you like Siri, figure out why you like it. I know who they are. I've been trading Siri for months. I've been following the ups and downs. So I'm perfectly okay with buying it. All right? But you need to ask yourself the question. I don't look a day over 50. I'm going to take that as a compliment. Yeah! Anyway, no, thanks. No, I'm actually 60. Okay? Well, so I'm kind of a little, what do you call it? Uneasy with the retirement because there's nobody else my age that is retired that is okay. I still ride a bike. Okay, I still play soccer. Okay, I still roll around on the ground with my grandson. Okay, I'm just a big freaking child still. As a matter of fact, a lot of my ex-girlfriends say, "You're too juvenile for me." I say, "Hey, fine, have at it, whatever. It's my life. I'll live it the way I want." All right, Twisted Philly. It's an interesting question. Ooh, thoughts on Nike. Press, we'll take a look at Nike in a second. NKE. All right, so Twisted Philly. Are you just buying low and selling high? Well, I'm not quite sure where I see a flaw in that idea. Think about it. What else are you going to do? Buy low, sell high. Well, you're not going to get any lower than a 30-day low. You're going to make most of your money buying low and selling high. So if I buy it here, sell a covered call. So I'm doing what's called dividend capturing 2.0. So I'm looking at stocks just before the dividend, okay, waiting for them to move up. When they do move up, I buy them. I sell a covered call against it, get 1% per week. I'm not seeing what the problem is there. You want to call it what you want to call it? Hey, perfectly fine. pretty much like everyone else. Thank you there, Florida, Georgia. Oh, okay, where are we at? All right, Sunshine, thank you for that. I'm going to take that as a compliment. What books do you recommend? I already told you that one. Thoughts on Iron Mountain. I already told you about Iron Mountain. It's a no, it's a monthly. Okay, when I say weekly cash flow, how do you get weekly cash flow from a company that has a monthly option? That's once a month. I'm looking for once a week. Cardiology guy, dude, I haven't heard or seen from you in weeks. Where have you been? Well, cardiology guy, if you want to join the morning trading group, you can get to watch exactly what I buy. Ooh, Chris wants to take a look at Walgreens. Now, I do have Walgreens. I've held on to Walgreens for a long time. I think I have Walgreens in like 4 different accounts, I think. Seth, we already looked at Intel. I tell you what, Seth, after I'm done here tonight, this recording is going to be, so the whole evening's event is going to be recorded on YouTube. Okay, there's 2 channels on YouTube. You can look at both of them after we're done. You can get my rundown, let's call it rundown on Intel. I like Intel, I do. Is CRWD? No, they have not been around for 20 years, dude. Mesh, we're going to take a look at FedEx next, right after we look at Walgreens. WBA. Now, Andrea, she's here in the audience, she did a really great report for you guys on Walgreens. Because we all have seen Walgreens, look at it, dropping. Now, there's a reason why Walgreens is dropping, and I blame it on the current administration. Okay? The current administration is failing to prosecute theft and criminals. Okay? You can perfectly fine stealing shit, get a slap on the wrist, and they set you loose. No recourse whatsoever for your actions. So yeah, you have a lot of stores that are, let's say, losing money because of that scenario. Macy's is one, Walgreens is another, CVS is another. There's a few of them. The smaller stores, easy to walk in, take the money, run out. That's what they're doing. No recourse whatsoever for their actions, and I blame it on the current administration. But that's me. I don't want to get into politics, so let's keep moving on. So, I do have a bunch of Walgreens, and I have been following it. Okay, we currently have a new bottom right here. Okay, it was 3 weeks ago. So our new bottom is 3 weeks ago at 8.45. She went up, pulled back, up, pulled back. Well, right here is, what, 3rd down day in a row? Well, I'm kind of curious of where it's looking. My position is right here at 12. So I'm into it at 12 at this moment. Okay, 12 is not even on this chart, but I do write covered calls in the 9.50 area. Okay, just that way at least I'm having cash flow coming in. Okay, Mehesh wants to take a look at FedEx. FDX. FDX, try it again. There you go. FedEx. Nice. Ooh, we talked about this on Friday, that big drop. I want to find out why it had a drop like that and how can we take advantage of it. Because I love when a good company drops because of news. Because if you think of it this way, did the CEO of FedEx give everybody a call and say, hey, our stock is down, don't show up, we have to tighten our belt? No, they do not do that. Okay, FedEx workers, they go to work every day. They put in their 40 hours a week. I love one of the new policies that's up for consideration with the new administration. Overtime, not taxed. Think about it. If you have people that are not being taxed on their overtime pay, well, a lot of people are going to go work more overtime because they're not being taxed on it. That's time and a half and no taxes on time and a half. That's freaking awesome. Okay, great. So what's happening with FedEx? Look at that big drop. Well, you have a big gap up. Look at this. You got a big gap down here, up here, and a big gap down. Okay, they call those black swans. I hate black swans. I do. Okay, now I'm an option seller, so I don't get the appreciation when it goes from here to there. Whoever bought my option does. But I like when it gaps up on a Monday, and that's happened to me a couple of times, where I don't hit my goal on the weekend, I mean by Friday, but on Monday she gaps up. It's like, yep, I'll take it, thank you. All right, so let's finish up with FedEx. All right, a year ago, FedEx is at 261. We got the bottom on the 25th of October of last year, and that was 224.69. Now, a couple of gaps up. Look at our high of the year. We've got a triple high. Check it out, a triple high right there at 314. 1, 2, 3. That's what you call resistance. I mean, does not want to go over that price. All right, so she drops, retrace, drops, retraces. Let's take a look at the last 30 days. Here we go. Here's the last 30 days. Look at that. Doesn't that look lovely? All up to here, okay? She goes up, pulls back, goes up, big drop. Look at the volume spike. I can almost bet that has something to do with news. All right, great. So what happens on Monday? Well, I'm not going to do anything until I find out what it opens up on Monday. Usually with a big gap down like this, usually they're going to have a bounce to the upside. Okay? If you like FedEx. Well, let's take a look at the numbers of FedEx. Right now, it's at 255. The 255 is going for 330. Now, that's a little bit too many numbers for me, so let's quickly go into the calculator to find out exactly what kind of rate of return that's going to be. All right, the 255 is going for 330. 330. And you divide it by the purchase price, 255, and that comes to a grand total of 1.3% for the week. 1.3. Okay, fine. I like 1.3. Now, what does FedEx usually do this time of year? For that, we take a look at seasonality. Now, for those of you who don't know what seasonality is, okay, it's a chart like any other chart, except for this one. It goes January 1st, very far end, December 31st, this end. The blue line represents the movement for this year, okay? The blue dot represents Friday, right there, okay? Up, down, up, down, up, down. Where should you go normally this time of year? Well, the red line represents 10 years worth of data. 2014, 15, 16, 17, 18, 19, 20, blah, 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 blah. 10 years worth of data. Okay, this is what it usually does this time of year. See that little dip? There's a little dip right there. So let's zoom in. Put my cursor on that blue dot. Click left, drag right. As soon as it lights up, that's 2 or 3 weeks. Okay, what's going to happen? Is that guaranteed? No, it's not guaranteed, but that gives me an idea of what it normally does year after year after year. It's not guaranteed, but, you know, business as usual. What does UPS do? Well, they don't create new products. They don't do anything new. What do? They deliver packages. That's it. All right. All right, that was FedEx. Let's go back to my regular chart. Close this out. Yeah. So I'm not going to do anything with FedEx, but I am going to keep an eye on it tomorrow morning. So Mahesh, tomorrow morning before we sign off, let's take a look at FedEx again to see what she opened up at. Now we want to wait until after the market opens to see what happens. It probably will go up a little bit. It won't gap up because it'll probably open somewhere here in the 257, 258 area. Somewhere. All right. That being said, let's keep on continuing. All right, Seth, we already looked at Intel. CRWD. Didn't we say CRWD didn't have dividends? CRWD. It's at $300. CRWD. Okay. CrowdStrike. There are no dividends at this selected time period. No. CRWD. Nikola, not old enough. Okay, I like 20 years of increased dividends. Nikola has not been around long enough. Sorry. Teach me, OJ Gyms. How are you today? Can you do Etsy? Chris, I could do Etsy, but you're not going to be happy about it. Then they have not been around long enough. Okay? Which means they don't have enough dividends to pique my interest. Etsy, E-T-S-Y. Okay? No dividends. Sorry. Iron Mountain's already a no. Dollar General, Badfish. Badfish wants to take a look at Dollar General, DG. I like Dollar General. It is on my list. I love this gap down here. When it did gap down, yep, I bought it because I love gap downs, especially when it comes to a new bottom on a company that it's not going anywhere. Dollar General, really? They're all over the place. All right. A year ago, we opened up at 110.04, topped out at 168. And our bottom is right there at 77. Wow. Can you imagine that? It goes from 125 down to 85. 125 to 85. That's like a $40 drop. Is that a $40 drop from here to here? That would make me a little uncomfortable. Because $40 on a $125 stock, $40 is about 30%. That's a 30% drop from here to here. Now she's going sideways, gets a new bottom there. Okay, now she's slowly going to the upside. See that? Very slowly. I like Dollar General. Right now she's at 86.01. Well, the 86s are going for $1.37. That's well over 1%. And I do believe Dollar General is written down. Yep, written down for next week, which is tomorrow. Now, just so you guys understand, don't misquote me. I'm not suggesting you buy Dollar General. It is not a recommendation. I'm just telling you I'm buying it. That's all. Best Buy, BBY, Fab, BBY. Let's take a look at BBY. All right, now, don't get me wrong. BBY is an interesting company. I'm going to say no only because too close to the high, number one, okay? And this big, huge gap. Gaps have a tendency to fill. What does that mean? That means this baby's going to come down eventually and fill this area. Yeah, I don't want to be any part of that. But I will put down Best Buy for about 3 weeks. 3 weeks we look at Best Buy again. BBY. All right. That being said, next on the list, Tesla. Ivan, I don't do Tesla. Tesla does not have dividends. And Chris, we already looked at Walgreens. Iron Mountain is big into data centers and storage of government documents, physical and digital. Great dividends. Yeah, cardiology guy, I looked at IRM and I came up with a no for me. But if you like it, hey, more power to you. Okay? Okay, Iron Mountain is monthly. If you like it, great. Well, right now it's at 115. What's the 115 going for? Well, the 115 is going for $3.40. Okay, so let's do the math. Clear, $3.40. Okay. Okay, see it? $3.40. First thing I want to do is I want to subtract the 95 cents that I'm losing because the current price is at $115.95. And if I sell the 115s, well, I'm losing 95 cents. So I take the 340, I subtract the 95 cents. Okay. Now I'm walking away with $2.45. All right, great. Well, what's my rate of return? Well, my rate of return, let's divide it by the purchase price, 115. Now, why not 115.95? Well, because I already subtracted the 95 cents. No reason to add it to the equation once it's been subtracted. Okay, that's great. So my profit, $2.45. Purchase price, 115. My profit is going to be 2.1%. Now, you may think 2.1% is a good thing, but that only comes to 24% a year. Okay, I've got to hold it for 4 weeks. Okay, it expires in 26 days. That's 4 weeks. So I divide this by 4. So now I'm getting a whopping 0.53%, little bit more than 0.5% per week. Explain to me why you think that's better than 1% a week. Okay, that's only 24% a year. I'd rather get for the 50% a year. But besides that, let's take a look at this for a second. 30 days ago. Here we go. 30 days ago. Let's count how many days. 30, a month ago, okay? We got 5, 10, 15, 16, 17, 18, 19, 20, 21. 21. Well, we got 26 days till it expires. Now, if it's currently here at 115, look at what it did over these 24 days, and now I have to look at 26, okay? Up, down, up, down, up, down. Okay, now where's it going to be in 28 days? Because I got to wait 28 days for this option to expire and to give me an idea of where it's going to be. Yeah, by looking at that, I can't really tell where it's going to be in 28 days. I don't like monthlies. The numbers don't work. It's nothing but a headache for me. Okay? No. Sorry. I don't like monthlies. Already did Walgreens, WBA. Sorry, cardiology guy. I mean, you're a cardiologist. If you're a cardiologist, you got more money than I do. So why are you concerned about 0.5% a week? Great, fine, do it. You only have to do it once a month. Okay, and it gets you 24% a year. Well, that's probably pretty good. When you have a chance, press. How many shares are in a call contract? 100. SMCI, no. You're looking for the upside this week? Yeah. Thank you for your time. You're welcome there, Mike. Check out YMAX. Oh my God, YMAX. I could say no now. YMAX. But you prefer me to say no now. No. Okay. Monthly, didn't I just go through an example telling you that monthlies just don't work? Nike. Let's take a look at Nike. Sorry about that, dude. Nike, NKE. Do you remember this big drop right here? Okay. I bought Nike right here. Okay. I sold a couple of premiums, got a nice premium. Right here, where she gaps up, yeah, I got called away because he gapped up really high. SMCI, Petrage, yeah, SMCI is a no. Black screen, please. I have no idea what black screen means. Yes, I remember. Okay, so look at Nike. Okay, where was it a year ago? Where is it now? Where's the high? Where's the low? What direction is it going? So it went down, found the bottom. Now she's going back up again. Great. Well, let's zoom on in, take a better look. But first, before we do that, let's check out the numbers. Is it even worth our while to buy Nike? Right now, it's at $86.40. Well, the 86 is going for $139. At 40 cents off there, you walk along with 99. Well, that's more than 1%. And I'd rather do the 86s than the 87. But the 87s are giving you 1% also. So either one is fine. But me personally, I'd go for safety, the 86. Because it's already at 86.40. What's the stock need to do? Just stay where it is. Okay? So let's take a gander. A year ago, we were at 91.04. We topped out at the end of the year at 123. Okay, I remember this big gap right here. Same thing happened with Starbucks. I remember Starbucks dropped. And then when she gapped up, I was called out again. Okay, so it was a big drop here back in the beginning of July. But let's take a look at the last 30 days. All right, so here we go. Last 30 days. What is this telling you? Because I know what it's telling me. 30 days ago, we're 84. Okay, we dropped down to 77, and now we're at 88. Yeah, no thank you. You got this big gap here. This thing's going to pull back. Sorry. I mean, I do puts on this one. I do the 83s, and the 83s are going for 6. That's not enough. Nope. But it is what it is. All right. Well, 10 minutes of 11. We got a ways to go. Okay, blank. You got to look at black screen, please. I have no idea what that means. All right, this one's not working at all. Is it going to work? Yep, there it goes. It's working now. All right, so that being said, SMCI is going to be a no. Sorry. Looking for a call for tomorrow. Just can't find anything I like. Okay. How about CVS? Let's take a look at CVS. I actually have some CVS. Nope, that's going to be a no. Sorry. Live from where? I'm in St. Petersburg, Florida. All right. That being said, CVS, Here's our high, here's our low, here's where it was, here's where it is. Look at this direction here. It's channeling. I love it when a stock channels like that. Currently at 57.50. The 58s are going for 41 to 60. Yeah, not 100% there. Can't really get behind that one. But the 57s are giving you 1%. Uh-oh, I missed the question. What time is it in North America? It is 10 minutes of 11. All right, conservative, YMAX. We already looked at that. That's a no. Okay, Patrage, I don't know if that's the right way to spell it, but it consistently goes up. Okay. I think PM. Yeah, it is. It's 11:50 p.m. All right. SMCI is a no. I'm not quite sure if that's what he's talking about. Yield max is a no. Ooh, what about advanced auto parts? Nice. Advanced auto parts. Here we go. First thing I want to see, advanced auto parts. Here's our high. Here's our low. Here's where it was. Here's where it is. This is the direction it's currently going. You're from India. Cool beans. I don't know anything at all about the Indian stock market. And I got to apologize for that. I'm only versed with the U.S. stock market. Purple Rose, how are you? Since the 41 is going for 93, that's over 2%. I like 2%. And I like advanced auto parts. All right. That being said, a year ago, 58 topped out, 88.44. That was in the end of March. Uh-oh. The last 30 days. Check out the last 30 days. The 30-day highs at 54, 30-day bottoms at 38. She goes to the upside. They pulled back. Again, this is one of those companies I'm going to wait until Monday after the market opens to see what's happening. Because right here could be an anomaly, and she could be going back to the upside. But if she's going up and turning here, it makes me a little uncomfortable. Because look at the last 30 days. Dropping, 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 bounces up. Well, from 38 to 44, that is $6. That's a little bit more than 15%, I think, 16%, somewhere in that area. So it could be profit taking. I don't know. It is what it is. But PLTR is a no. Sorry, Sunshine. I mean, I do appreciate the comment earlier, but PLTR has no dividends. Good times, 1% returns on spiders. That doesn't make sense. Well, I don't do the spiders because that's not what I'm looking at. I don't like the spiders. SPY. And I don't know how many times I got to point this out on the spiders. All right. Okay, let's take a look at your rate of return. Okay. The yield. It says it right there. The yield. The yield is your rate of return. You put your money in, they give you a certain amount back. The amount you get back, you divide it by the purchase price, and that gives you your rate of return. Well, it's 1.21%. Okay, don't believe me. Do your own research. Okay? Currently, year-to-date total return is 20%. Okay, fine. But your yield is going to be 1.2%. I like 50%, but that's me. I'm strange. Purple Rose, hi. Pahaj, good times. He's wrong. Oh, I love it when people tell me I'm wrong. SMCI. Okay, so Pahaj thinks I'm wrong, but he likes SMCI. Okay, SMCI. Okay. Super micro computers. Right now it's at 457. Lovely. But let's see how well they do with their dividends. SMCI. Historical data. Okay, we go to historical data, and then we look at dividend prices. And oh, so if I'm wrong and I say no to SMCI because they have no dividends, There are no dividends for the selected time frame for SMCI, right? SMCI, super microcomputing. Okay, slide down a little bit. Dividends only, there are no dividends. Why would I look at a company that doesn't have dividends? It makes no sense. Emily, help. Abuse, really? I can't help you, Emily. I'm down here in Florida. I have no idea where you are. Okay? So, Petraj, I'm sorry you don't agree with what I have to say. Can't help you out. TikTok, did you already look at Riley? No, I haven't looked at Riley yet. Let's take a look at Riley. Oh, I haven't looked. Wow, I'm missing all these questions. Oh boy. Okay. Flipper, if a person did not have to take his weekly profits, why not a 4% monthly? I like the way you think. Find me a 4% monthly, and then find me a way to figuring out where is it going to be in a month. Biggest advice to a young investor. Never accept no as an answer. If someone says no, ask someone else. Keep asking, keep persisting, ask better questions, and keep asking until you get the answer you're looking for. Unless, of course, it's a stupid question and it's absolutely no. Okay? You ask people, 100 years ago, hey, let's fly to a moon? No, you're crazy. But nowadays, it's a different story. It all depends on the question. Ask a better question. Get a better answer. All right, Petraj, I like SMCI. No, I don't. Okay, SMCI does not have dividends. The name of the show is Dividend Investing for Weekly Cash Flow. If a company doesn't have dividends, well, it doesn't fit. Sorry. So TikTok, let's take a look at Riley. R-I-L-Y, because we haven't looked at Riley yet. Here we go. Our high, our low. Where are we? What direction is it going? It's kind of going sideways at the moment. 580. 50s are going for 65. Well, that's nice. The 6s are going for 45. Nice too. If you like Riley, right? What's the last 30 days look like? Okay, here's the last 30 days. Here's your high, here's your low. She went up, she pulled back, went up. Who knows where it's going now? I'd wait until Monday to give an idea which direction it's going. Rich Bruner, going to be a good premium week? I hope so. But Flipper, you know what? We've looked at it before and we've asked the same question. Find me a stock that has a 4% monthly dividend. And then we'll take a look at it and see if we can project where is it going to be in 30 days. Because we're not looking at 5-day intervals. We're looking at 30-day intervals. And I just don't like doing that. Ceiling and floor on SPY tomorrow. I don't do spiders. Sorry. Reggie Bo Jackson. Dude, I haven't heard or seen from you in a while. How's it going? Well, at least what I've looked at that. Okay. All right. WBA, we already looked at Walgreens. Hey, Austin, what's happening? Siri. We already looked at Siri. Yep. I'm retiring this year at 56. Do you recommend? Well, if you have enough money, that's awesome. Yeah, I already looked at Siri. We already did Siri. If you want to look at Siri after the show is over, go over to YouTube. It's all recorded. All the information from Siri is already there. You should hold stocks and only trade a minority. Stocks go up over time because earnings go up. Okay, Petraj, if that works for you, more power to you. I don't want to hold on to anything. Okay? I've tried that route years ago. And I'm not in a position. Okay? So, see if I can make you understand this. See if I can say it in a way that you'll understand. Okay? I have a certain amount of money in my portfolio. Okay? That certain amount of money at 1% a week takes care of my bills. All right? if I had to buy and hold on to a stock and wait for it to go up in order for me to take care of my bills, it just wouldn't work. I don't have that luxury. I'm not there. All right, if that's what you are, perfect, good, great, wonderful for you. Not me. I have to buy. I buy and trade every single week to make my 1%. That 1% allowed me to retire and just enjoy the life I'm enjoying. You already covered this lesson. Buy low, sell high. Yeah, I get that part. But people keep arguing with me. PM didn't work very well, dividend capturing. Philip Morris. Really? Well, let's take a look at Philip Morris. PM. All right, Philip Morris wasn't in October. There it is right there, the 26th, $1.35. PM. Okay, so 10 days before on a Monday on the 9th. 999999 right there. Okay, so who said P didn't work? Don't. All right, real estate flipper, you ready? This is specifically for you, okay? Real estate flipper. Now, Philip Morris had a dividend on the 26th, okay? The 26th. 2 weeks prior, on a Monday, would be the 9th, okay? The dividend is $1.35. See that? All right. So if we come over to here to see the 9th of September, okay, 9 September, opening price, 125.72. When I say I want to buy it 2 weeks prior on a Monday, 2 weeks on a Monday, at the opening price. The opening price is 135.72. Dividend capturing is where you capture the dividend or its equivalent. Now, if the dividend is 135, well, 125.72, okay, 125.72, that's the opening price, 175.72, okay? The dividend, 135. So let's add 135 to it, plus 135. So my exit target is 127.07. See that? So I'm looking for a high of 127. Okay, so let's go back to here. What is the high of the day? Right here. 128.22. So how can you tell me that didn't work? When I say it simple, safe, predictable, consistent, and no way to lose, well, you have the rules. There's certain rules that go with dividend capturing. Okay, you buy it at the opening of the day, 10 days prior to the EX date, whatever the dividend is, you add that to the purchase price. The purchase price is that right there. The high is right there. You should have been out on day one. Day one is 128.22. So I don't know how you say it didn't work, because the numbers are there. Numbers don't lie. The opening of the day was 125.72. Okay? So we can go Philip Morris. PM. Philip Morris. Now we want to go to historical prices. Now you said September 9th. Okay? Here's September 9th right there. Okay, September 9th, 125.72. The high of the day, 128.27. Well, that's almost a $2.50 increase. And you own the dividend was only a 125. So how did you miss that? Buy at the opening of the day. As soon as you buy it at the opening of the day, add the dividend to it, and that's your exit. Okay, you should have been out on the same day with your profit. I can't help you if you don't follow the rules. The rules are there for a reason. No right on red. Well, you get a ticket, you know. Okay, you jump up, you're going to come down. Certain rules are rule. Anyway, besides the point. So yeah, Philip Morris did work. You just didn't do the trade properly. Is there an exit strategy to know when to pull out of a trade? Yeah, when you're profitable. Okay, remember rule number one, never buy something you don't understand or you don't want to hold long term. Always buy as if you're going to hold it long term. That's the major decision. Number one, always make sure you're buying for the right reason, that you know why you're buying. Okay? Never buy something you don't understand. And if you do that, rule number two, never sell at a loss. Okay, so something went wrong somewhere. Either you picked a stock that you probably shouldn't have picked, or you didn't do the trade right. Now, Rich Bruner, when you say that's not my strategy, my original strategy was dividend capturing, okay? But once I got introduced to weekly options, it changed a little bit. So dividend capturing, yeah, it works out very nicely, and that's where we first started. Okay, Philip Morris, here's the dividend, 135. Okay, 2 weeks before, on a Monday, well, that was the 9th. Those are the numbers. The numbers don't lie. They are what they are. Making money. Thank you, cardiology guy. I'm glad you're doing good. All right, Florida, Georgia. You want to take a look at QCOM. QCOM. All right, here we go. QCOM. High, low. Where was it? Where is it? What direction is it currently going? All right. 169. Well, the 160 doesn't have a 169, it has a 170. But the 170 is going for 335. The 167 is going for 435. The 167 might be a better play. Definitely safer. And I like safe trades. You know, because when you get to a certain point, your whole perspective changes. Okay? Now, some of you may have a difficult time with that. But when you're a kid, you have certain things in your mind, that's it. When you're a teenager, you get certain things in your mind, that's it. And then when you transition from a teenager into an adult and you start getting adult responsibilities, well, that's another thing. And then when you become a parent, well, that's another whole new set of things you have to take into consideration. After that, then you become a grandparent, and then you become an empty nester. Then you become a retired person. Your perspectives, your views, and your thinking changes with each segment of life. NVIDIA, back to 90. Yeah, I don't like NVIDIA. Okay, they have dividends, but the dividend's 1 penny. The book value on NVIDIA is $2. Why would you pay $100 and something for a stock that's only worth $2? And it's only paying a penny? Yeah, no thanks. The numbers just don't work on NVIDIA. But that's me. I like consistency, predictability, and safety. Safety is my number one. I have no desire to go back to work. Okay, you guys, for those of you that are in the working classes and are working, okay, great, more power to you. You know, I did my years. I've been working since 1973. That's a long time. I think I deserve to have time off. What about state and local governments and not the executive branch? I have no idea what you're talking about because we're talking about stocks at the moment. How about TFM or TLT? What the heck is TFM? TFM. No, TLT. iShares, really? You've got to be kidding me. Okay, let's look at TLT. TLT. Take a look at the dividends for TLT. Dividends only. Maximum amount of dividends. All right, so TLT has dividends all the way. Oh, and they pay monthly. Wait a second. 2016, 2017, 2015, 2014, 13, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2. Okay, so we go all the way back to 2002. So that's more than 20 years of dividends. Great. 37, 34, 39, 45, 31, all over the place. 40, 35, 38, 37, 35, 40, 32, 40, 36, 35, 33, 32, 36, 40, 28, 33, 35, 32, 33, 36, 31, 34, 41, 28, 30, 31, 32, 39, 35, 27, 26, 27, 25, 25, 29, 27, 30. Do you see any consistency here whatsoever? I don't. Okay, so yeah, no. Now, let's take a look at the summary on TLT. Yeah. 3.7% yield. Yeah, no thank you. Profit and loss year to date, 2.65. Yeah, you have fun with that one. I'm saying no to that one. I own some, we'll sell tomorrow. All right, Rich. Chris, I know you probably get this question all the time. How much can a regular person start with? Now, my grandson started with 50 bucks, just to give you an idea. Then what is your favorite high dividend stock? My favorite stock is Macy's. Macy's, Nordstrom's, Kohl's. Those are my three favorites. The reason being is each one of them is giving me over 1% every single week. Macy's was giving me close to 2% for a long time. Yeah, I know stocks go up. They also go down. So, Chris, yeah, it's going to take a little bit longer starting out with 1,000. You think about it, because there's not a lot you can do with just 1,000, other than keep educating yourself, keep looking at stocks, keep doing dividend capturing at first while you're building your portfolio. Okay, I don't know how old you are. I have no idea, no information new whatsoever. No idea what your risk factors are. No idea what your commitment level is. I have no clue whatsoever. Okay, you want to start with $1,000? Fine. Do what you can afford. Find something that works and stick with it. All right, Southern Nova. Southern Nova. If you had a gap up Monday, right now I have most of my money. Donald, I feel bad for you. VOO is absolutely horrible. So let me take a look at VOO in 2 seconds, and I'll show you why personally, for me, okay, I would never do VOO, but I'm going to show you in a couple of seconds as soon as I finish reading some of these questions. So hold tight. If you had a gap up Monday morning, would you sell the stock or would you do a covered call at a new strike? That's an excellent question. Now, I'm going to tell you what I tell everybody in a similar question like that. It's all about the numbers. Okay, what did I buy it for? What is the current profit? What does the covered call look like? And is it in a position where I can get more money from the covered call than I could from just selling the option or just selling the stock? It all comes down to the numbers. And that's a question for a morning trading group. Well, when it gaps up in the morning, we'll take a look. All right, what did I get it at? Where is it now? Is it more profitable to just sell it, grab that profit, and jump into something else? Or is the stock in a position where it looks like it's going to continue to go up? These are questions that we can't answer these questions now. We have to wait till tomorrow. Don't you think in the course of 20 years, the market your money does good in VO? No, I do not. So let's take a look at VO. I told you we'll take a look at it. Fidelity. Hold on a second. James, how is it that you're making a profit on a premium if you're selling covered calls and prices go up? Okay, hold on a second. Selling calls, you bet the price won't go higher so you can keep the premium. Okay, so what's that? Villadie? How do you pronounce that? Villadie. Okay, whatever. Let's see if I can explain this to you in a manner which you'll understand, because apparently there's a disconnect somewhere. Let's find a stock first. Find me a good one. A good one. Oh, Siri. I like Siri. Okay, so here's we're looking at Siri right now. All right. So Villadie. I'm gonna say Villadie, whatever. Villadai, okay? Here is Siri, okay? Currently, the price is at 24.95. That's the current price. There's no arguing that because it is what it is. The last traded price, 24.95. The bid, 25.10. The ask, 25.17. Okay, great. If I buy it at 25.17 and I sell the 25s, I'm collecting 62 cents. Correct? Follow me with the math here for a second. Clear this out. The 25s, I'm collecting 62 cents a share. Okay? Now, if I buy it at 25.17 and I sell it at 25, well, I'm losing 17 cents right off the top. Okay, great. I got to take that 17 cents from somewhere, so let's take it off of the profit of 62. So I'm going to subtract the 17 cents that I'm losing right off the top, and that's going to give me a profit of 45 cents. All right? So that 45-cent profit. Now, rate of return is calculated when you take your profit and you divide it by your investment. So at this moment in time, the investment is 25. Well, why not 25.17? Because we already subtracted the 17 out of the equation. No sense of subtracting it twice. So at 25 bucks divided by 25, that will give me a 1.8% return, close to 2%. Now, here's the thing about a covered call. I own it. Okay? Hypothetically, if I buy it tomorrow morning, I will own it at 25.17. That number will never, ever, ever change until I sell it. Now, if I sell somebody the right, not the obligation to buy it from me, by Friday, that is this Friday right here, 27 September 24. That's the premium I'm collecting. All right? Now, if on the 27th, the stock is at $32, whoever bought that option from me at 62 cents now has the right to buy it from me at $25. Do I honestly care that it goes up? No, I don't care because I've already collected my 1.8, what was it, 1.8%? Yeah, my 1.8%, okay? I will collect my 1.8% tomorrow morning. So if I buy the stock tomorrow morning, sell the covered call tomorrow morning, that 1.8% profit goes into my account immediately. Now, if the stock goes up to 36, whoever bought it has the right to buy it from me at 25 bucks. Do you think I honestly care? No, I'm not looking for capital appreciation. I'm looking for safety, simplicity, and consistency. Okay? The math is what the math is. You cannot argue with the math. If the purchase price is $25.17, I sell the 25 strike, I'm collecting 62 cents per share. I get that immediately. Stock goes up, don't give a rat's ass. I still got my money. Okay? Now, if by chance the stock dropped to $24.99, well, I would keep my shares. And then I would do a covered call the following Monday. And if it goes at $24.99 again, well, I will sell the 25 the following Monday. And I'll keep selling the 25 call until I get it called away from me. All right? So I'm not quite sure what you're talking about. Selling calls, you bet the price won't go up. No, I'm kind of hoping the price does go up because I'm looking at it. So here's the high here, 30-day high. Here's your 30-day bottom. Well, what happens between a 30-day high and a 30-day bottom? If I'm buying a stock and it goes up, well, hell yeah, I'm taking my profits. I'm not in this because I'm a nice guy. I'm in this to make a profit. Okay? If the stock goes up and there's a profit there, yeah, I'm taking it. I really don't care. I'm not looking for capital appreciation. I'm looking for cash flow. And I'm not going to buy a stock unless it is the right time to buy. Here's your 30-day top, your 30-day bottom. Well, what happens at a 30-day bottom? People like you and me say, wait a minute, Siri's at 23? Hell yeah, I'm buying it. That's exactly what I do. I look for the drop. Great. Is it a good company? Yeah. Siri was on Warren Buffett's list. That's where I got it from. It wasn't on my list. It was on Warren Buffett's list. So if it's good enough for old Warren, it's good enough for me. Okay, hopefully that answers that question. Okay? So yeah, simple, safe, predictable, consistent, 1% per week. And there's no way you can lose if you do it right. The only way you're going to lose money if you do something wrong. Okay, this was created for a 9-year-old. Why are you making it more complicated than it needs to be? First thing I want to do, okay, very first thing I want to do. Hold on a second. Get this a little bit better here. Very first thing I want to do is I want to find a list of stocks that I like. That's the hardest part, finding the list of stocks that you like. Well, I go to the Dividend Kings. 54 companies that have consistently increased their dividends for more than 5 decades. Okay, there's 54 of them. Then I want to take a look at the Dividend Aristocrats. 67 companies that have increased their dividends for 25 consecutive years. Then you have the Dividend Champions, 150 companies that have consistently increased their dividends for 25 years or more. But the rules are a little bit different between the Aristocrats and the Champions. But still 25 years of increased dividends. And then my fourth list is going to be the Dividend Contenders. They have increased their dividends between 10 years and 24 years. And there's 300 of those. So you take those 4 lists, you throw in Warren Buffett's list just for the fun of it, because it is Warren, and if Warren's good enough, you know, hey, it's good enough for me. So I now have 300 companies that have consistently increased their dividends, have weekly options, and then I take a look at them one by one. Now, I've been doing this for 20 years, so it's not that big a deal for me. Now, for those of you starting out, yeah, it's going to take some time. You got to see if you like the company. So what companies are we looking at? That I'm looking at. Nordstrom, I already told you about Nordstrom. Halliburton, Newmont, Bank of America, General Motors, Kimberly-Clark, Pepsi, Coca-Cola, Macy's, Devon Energy, Albemarle, T. Rowe Price, Waste Management, on and on and on. Almost every single company I look at that I keep in my roster or my list, you probably heard of every single one of them, because I am old as dirt. That's what my children say. You're old as dirt, Dad. I say, thanks a lot. But anyway, I don't invest in anything I don't understand. I grew up with these companies. I know who Altria is, AIG, Seagate, Occidental Petroleum, Nordstrom's, John Deere, Fifth Third Bank. I know these companies. I don't buy something I don't know, number one. That's number one, picking the stocks. Number two is when are they trading? Because each one of these stocks usually, not guaranteed, but usually goes up in value just before the dividend. See these little green dots? Those represent the dividend dates. There's 4 dates to remember. Date number 1 is the announcement date. Hey, this is so-and-so, blah, 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 we're paying a dividend. Announcement date, simple. Second date, the EX dividend date, the last day the stock trades before the dividend is paid out. If you want to collect the dividend, you have to buy it before the little green dot. Okay, General Electric, the 26th of September. Okay, if you want the dividend for General Electric, you got to buy it before the 26th. That means the 25th, the 24th, the 11th, the 3rd, the 4th, whatever. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, payment. Simple. Okay, I buy it before the EX date. 2 weeks on a Monday at the money at the beginning of the day, and then I sell the covered call closest to the purchase price, as long as it's more than 1% and the chart is in the right position. I'm not buying at the high, hell no, and I'm not buying at the low. No, I'm buying it when it hits the low, turns around, and starts moving back up again. Because people like me, and people like a lot of you people out here, you see a profit, yep, that works for me. It's not a profit until you take it. And nobody ever went broke taking profits. And no, prices don't always go up. Okay? Okay, so let's keep on going. Plug. Uh-oh. Plug. Do I know who Plug is? P-L-U-G. And have I ever traded Plug? P-L-U-G. I don't think I've ever. Plug Power? No, I don't think so. $1.94. That thing's dropping like a rock. PLUG. Okay, has no dividends. That's going to be a no. Sorry, dude. Selling covered call puts on the hand, pays you if the price rises. So I'm confused about your strategy. All right, number one, you're absolutely incorrect. Okay, what I mean by you're incorrect. Currently, let's go back to Siri. Currently, this price is $25.17. If I sell the 25, I'm collecting that 62 cents. That 62 cents is 1.8% for the week. If the stock goes up, great, I'll be called out. I'll still get my 1.8%. If the stock goes down, I still get my 1.8%. Okay? And if they consistently increase their dividends, well, every year I'll get higher and higher dividends. Every week I can sell a covered call against it. So if it drops, yeah, I'm going to sell a covered call against it. Okay, I don't understand what you don't understand about that. That boggles my mind. Okay, it doesn't really matter. Options and stocks are two separate entities. Stocks usually traded in in New York. Options are usually traded in Chicago. So you have the stockbrokers over here in New York, and you have the option brokers over here in Chicago. Two totally separate things. Okay, if the stock goes up and down, okay, fine. But the options are totally separate. If the stock goes down, well, I keep the stock, and I get to write another covered call against it. And if it doesn't hit my target, I write another covered call against it. If it doesn't hit my target, I write another covered call against it. And I keep doing it every single week until I hit my target. Okay? I don't have to sell it if I don't want to. Buy something you do not understand or you do not want to do for a long period of time. If you don't understand, don't buy it. If you don't want to buy it and hold on to it for 10, 20, 30 years, don't buy it. It's actually that simple. Why are you making it more complicated than it needs to be? Okay, Joe Maz wants to take a look at AT&T. AT&T, here we go. Okay, I'm going to say no to AT&T right off the bat, but I am going to write it down to look at it in 2 or 3 weeks. Because look at where it is. Okay? The high of the year was what? Last week? Yeah, no thanks. I don't play at the high of the year. Because what am I going to do? Buy it high and wait for it to go higher? Yeah, no thank you. Okay, I will wait for it to drop a little bit down here in this area, then I'll take a look at it. Remember, this is just one of the stocks I look at. I got 300 other ones. So I'm not going to look at this again for another 2 weeks because next week we'll see if she drops. But she probably won't drop far enough to make it enticing for me to jump in. Sorry, Joe. Felix. Yeah, Felix, we already looked at FedEx today. All right, on it, CRWD, we already looked at that one. And Wavy up there. Yeah, Hawaiian Electric stopped paying dividend years ago. And since the fire's over in Hawaii, it's nothing but a shit show. Easy Tool. Easy Tool Talk. That's Sherwin-Williams. SHW. Yeah, Sherwin-Williams. Yeah, that's a monthly. That's a no. Sorry. Own it, CRWD? No. Wavy up. Nope. AG's getting sued. Yeah. What do you think about Carnival Cruise Line? Ooh, CCL. Yep. Well, Carnival Cruise Line, look at that. That's a nice run up right there. What do you think? Okay, it goes from 1550, 1850, 19. That's $3. That's $3.50. $3.50 on a $15 stock. That's a 20% increase. Do you honestly think people like me are going to sit and look at a 20% increase and say, you know what, 20%? Nah, I want it to grow a little more. Oh, hell no. It ain't a profit until you take it. All right? And nobody ever went broke taking profits. Look, here's your bottom here. She shoots on up over 20%. You don't take your profit, that's your own damn fault. Okay? I'm not trying to be anyone's friend. If I see a profit, I'm going to take it. That's me. Okay? I look for a simple, safe, predictable, consistent 1% per week, whether it's capital appreciation, whether it's options, whether it's dividends. I'm looking at the same stocks over and over and over again. And the only stocks I'm looking at are those that are consistently profitable. Why would you put your money into a company that's not consistently profitable? Okay? Alibaba, where we looked at that one. Is that COP or CQP? It looks like a CQP. What the heck is CQP? CQP. Yeah, that's an O. But COP, ConocoPhillips. I like ConocoPhillips, but ConocoPhillips is going to be a no this week only because, check it out. Here's your 30-day high. She drops, bounces back up. Okay? Last week was a good time to do ConocoPhillips. Now it looks like she's stalling. Okay? So it looks like she's stalling, and then she'll probably pull back next week. I look at these stocks day after day after day, twice a day. Usually it was just once a day, but now that I'm sharing with you good people here at night, it's twice a day. It is 11:31, past my bedtime. I'm going to turn into a pumpkin. I'm going to go through the rest of these questions, and we're going to call it a day. Alibaba, we already took a look at. CPQ doesn't work. Sherwin-Williams is a monthly. I don't do monthlies. Hawaiian Electric, they stopped paying dividends years ago. What's your thoughts on these weekly dividend stocks? I have no idea what you're talking about on a weekly dividend stock. I have never met a company that pays a weekly dividend. Okay, I trade weekly options on dividend stocks. Totally different story. All right, thank you for that. Do you do a call contract? Do you like, I have to buy 100 shares? Yeah, Cassie, to do one covered call, you need 100 shares. Okay, there's a lot of stocks. If you're worried about price, there's a lot of stocks that are under 20 bucks. There's a lot of them under 10 bucks. Bristol Myers Squibb, Honey Badger, you're a little bit late. I'm getting ready to sign off, but if you want to check tomorrow, we'll do that one. Riley, we already took a look at Riley earlier today. What am I missing? All right, EPD is a no. QYLD is a no. Sorry, James, how do you get access to the dividend calendar? Hey, Ivan, the dividend calendar is right here on Thinkorswim. Now, Thinkorswim's a trading platform. It's free to use. You go to thinkorswim.com, you can download it, and you can use it for a while, but if you want to continue using it, you'll have to open up an account at Charles Schwab. They'll let you use it for a while. How about the Dow? Yeah, the numbers. All right. Okay, seriously, if you like Dow, DOW, all right, you need to check a look at the numbers. Okay, what is their annual rately return? What are the dividends look like? Those numbers, you'll probably say no, thank you. Wells Fargo, William, we're past 11:30. Check with me tomorrow on Wells Fargo. I like Wells Fargo, and I like Nike. Nike's a good pick. If you buy a stock at 30, it drops to 22. How can you write a covered call at 30? Well, I wouldn't write it at 30. I would look at the numbers. It's all a numbers game, Seb. Okay? Where is it now? Where is it going? So if I bought it at 30 and I sold a 30 call and she starts dropping, well, I would lower that covered call until she found the bottom, turned around, started going back up. Then I'd be a little bit more curious of where I'm at. ARK, yeah, no thank you. Enron, how are you? Yeah. BV, yep. LEP, yep. Summit Therapy, yep. ARK, what? Buy a put, yep. ARK, blah, 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 blah. The teacher never buy a put. I use other strategy. Thank you for that. IEP, oh, no, dollar share every quarter. Delic, okay, IEP. You're talking about Icon, right? Okay, so you like Icon, IEP. IEP. All right, yep, there we go. Now, are you ready? IEP has a $1 per share quarter. You're absolutely correct. 100% on the money. Perfect. Let's take a look at the numbers. Your dividend is $4 bucks. Okay, the yield 30.9%. That's an awesome yield. However, you're not looking at all of the pieces of the puzzle. Now, let's take a look at the dividends to see how consistent this wonderful company is with their dividends. Dividends only, maximum. All right, are you ready for this? Because if you like Icon that much, I'm pretty sure you didn't look at the numbers. Let's go back to the beginning. Now, they've been paying dividends since the 80s. See this? Since 1988. They started out at 49 cents. So 1988, they were 49 cents. 1989, 49 cents. No increase whatsoever. 1980, 49 cents. No increase whatsoever. 91, no increase whatsoever. Well, let's look at 92. Okay? No increases for the first 4 years. Then the very next year, they cut it in half. Explain to me why you think that's good. Okay? So, they're at 24 for a year. And then they cut it in half again. So you're at 49 for 4 years. They cut it in half for 1 year. And then they cut it in half for 1993. Okay, well, let's keep on going. Now look at this. From 1993 to 2005, no dividends at all. Explain to me why you think that's good. So, in 2005, well, now you're down to 10 cents a share for dividends. You went from 40 to 28 to 12. Now you're at 10. And you think that's good? Hold on. Let's keep on going. Now, from 2005, 10 cents. 2006, 10 cents. No increase. 2007, they're at 15. 2008, they're at 24. Now, 2008, they're at 24. 2009, 24. 2010, 24. 2011, 24. 2012, 10 cents. How the hell can you say that's a good dividend? What the hell are you thinking? Okay, so now, 2014, they're at $1.50. 2016, $1.50. 2017, $1.50. No increases whatsoever. 2018, $1.75. 2019, $2. 2020, $2. 2021, $2. 2022, $2. No increases at all. 2023, $1. They decrease it by 50%. What the hell are you thinking, brother? Seriously. The company consistently decreasing their dividends, and you think that's good? Yeah, terribly sorry. Let's take a look at the stock price. Historical prices. Come on. It's not working for me. Uh-oh, it froze. It's telling me it's 11:30. Anyway, take a look at the price. Page is not responding. Exit page. We had a problem. See if it reloads. Nope, it's not reloading. All right, so anyway, to finish my little example about IEP, they're paying $1 a share every quarter. Yeah, they're consistently decreasing their dividends over the years, and you think that's good? More power to you. All right, I'm done for the night. I'm not looking at anything else. I just wanted to touch on AEP because I think it's horrible. That guy has billions upon billions of dollars, yet he's screwing all his investors, and you think it's good. ARK, yeah, no thank you. Okay, so you write it for 25, it goes to 26, you sold at 25. Yeah, so if you bought at 30 and sold it at 25. What? Why would I do that? Seb, you're not making any sense. What I'm saying is, if I bought it at 30, I would sell the $30 strike price. If the stock went down like 20, yeah, maybe I'll sell the 25s. If it goes back up to 30 again, I'm not going to let it get called away from me. Remember, I look at it twice a day. It doesn't go from 25 to 30 and I don't miss it. If I miss it, that's my own damn fault. Okay, this is my money, my responsibility. I keep a close watch on it. I look at it twice a day. Okay, I see what's going on consistently. Okay, if I buy it at 25, I sell a covered call at 25. If I buy it at 30, I sell a covered call at 30. If I buy it at 30, sell a covered call at 30, and it drops to 25, Yeah, then I might change, but I won't. All right. You're not making any sense, but okay. 86. If able, you can buy more shares after it drops. Yep, you can cost basis. Easier to exit when it rebounds. Yep. What do you think about Boeing? There's something about Boeing happened last week. I'm not 100% sure. I can't put my head on it at the moment because I'm in the checkout mode. Okay, so you're done. Steve Clark, how you doing? Steve, dude, if you really like it, you might want to go to a different channel. Facebook has absolutely horrible camera skills, and they don't hold on to the information. Okay, I do this on TikTok and YouTube also, and Instagram. Facebook's camera is absolutely horrible. All right, but Steve, show up tomorrow at 9, not at 11:30. 11:30, I'm done. Of course I am making sense. Well, you're making sense because you know what you're talking about. So you push it out, take a loss. All right. All right, Seb, I'm not quite sure if you're aware of this, okay? But I'll show you really quick because apparently you're not listening. Oops, let's go back here. Account statement. Okay. Now, Seb, just out of curiosity, okay? We're coming into the end of September. Right here, what you see on the screen behind me is year-to-date profit and losses. All my profits, all my losses. See the losses right here? 1, 2, 3, 4, 5. There's 5 losses right there. All the rest of them are wins. But they're not losses because 1, 2, 3, 4, 5, I still own all 5 of them. I have no intention whatsoever at selling at a loss. I haven't had a single loss at all in this one account here. This account here. Okay. 1, 2, 3, 4, 5, 6. 1, 2, 3. So I lost in 3 positions on this one. That's it. What I lost? 5,000? No, that wasn't it. That was a transfer. Okay, 120 and 28. That's why I lost 140. 2 in this account. And then the third account, like I say, I only share 3 accounts with you guys. That's it. Monitor. Account statement. Here we go. Let's get rid of that. Profit and losses. Here we go. Let's go all the way back to January. Whoops. Okay, so here we are. Profit and loss year to date. You ready? This account, profit and loss year to date. 1, 2, 3, 4, 5, 6. 1, 2, 3. I still own 3 of them, so I've only lost in 3 positions this year. So I'm not quite sure what you're talking about. It works fine if the price stays around the purchase, but if it drops too far, you can't collect premium. Well, yes, I can, Seb. You're new here. All covered call strategies, no matter what you buy and write, all have risks. Okay, Seb, I'm not going to get into semantics with you, okay? If you stay in bed in the morning, well, you run the risk of a tree falling on your house. If you get out of bed, well, you run the risk of slipping and falling. If you walk out your front door, you run the risk of getting hit by a bus or by a car or being robbed. Everything you do in life has a risk. I like to have odds and probabilities in my favor. If 80% of all options expire worthless, I want to be a seller. I do not want to be a buyer. If the stock I buy at the right time, at the right price, and I make my 1% a week every single week. As a matter of fact, just for the fun of it, because I haven't done it in a while, let's go to videos. These are my videos from a long time ago, okay? Here you go. Here's one right here. March 23rd, 2003. Hold on, I'll open this up.
27th of February. And we're back out on the 30th. That's a long time to hold on to that. It's almost a whole. WIRE comes in number 2 for 100% also. These things are all cents right now. Let's see how they do. As you can see.
All right, you see the date? March 23rd, 2003. You go through all my videos and you'll see 2012, 2013, 2014, 2015. I've been doing this every single year for 15 years, averaging 1% per week. Whatever you want to say, fine. You believe whatever you want. I really don't care. 100% honest. I really don't care. I buy a good quality stock. I sell a covered call against it. I collect a premium that's over 1%, consistently, predictably, and safely. Just be careful. Dude, I've been trading for 20 years. I really don't. Never mind. You know what? You guys have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. The trading strategy I came up with was created for my 9-year-old daughter. If you can't figure it out yourself, I cannot help you. It was created for a 9-year-old. All right? And you have been trading for 40 years. Well, then you should know. All right, Justin, how are you doing over there in England? All right, so Seb, you've been trading for 40 years and you can't do 50% per year. I can't help you out, dude. All right, guys, have a great night, and I'll catch you guys again tomorrow. For those of you in the trading group, the links were already sent. So live trading tomorrow morning. I'll catch you guys tomorrow. The stock list is already sent out to you guys. And we are done.